Good afternoon. This is Jim Barrett from RJO Futures. Note and bond market this morning on their heels, on their hard. New week, new month. Uh, buyers aren't around. Sellers are around today. Data triggered this. ISM was a little better than expected this morning, just slightly, but it was enough to really give the bears an edge. There are people that expect a second quarter bounce back in the U.S. economy, and here's the first proof that may be the case. And if we do have a bounce back in the economy, it's going to trump other data that keep the Fed waffling. Inflation is underneath target for 36 months in a row. Consumer spending is still soft. On and on. The dollar is still a problem. Actually, the same data that put notes and bonds down hard this morning have put the dollar up against the euro and other major currencies. And this is a concern to the Fed. It may cause them to waffle a bit, but I think the possibility of that moving in September or definitely before the end of the year will be there. Obviously, if data like this ISM keep coming in better than expected. Technically, the notes and bonds had rallied last week to resistance. Yields on the 30-year had fallen to 284 from around 310, 311, and the 284 coincided with some weekly structure points on a long-term chart in the cash market, and buying dried up at this point, like it should. This may mean the bonds turned down this year is could be the real deal. I mean, there's been obviously a lot of false alarms in a 30-year bear market, but we're if we go down and press what were the lows a few weeks ago down on underneath 3.1, and we may be on our way today with this 294. That could be it. Just set a completely new, different tone for long-term interest rates. Other reports coming up this week. Tomorrow we got factory orders, so we see if that follows through and confirms this ISM number. First week of the month, so unemployment's coming. ADP first on Wednesday, a little peek of what they think. Jobless claims Thursday, and then, of course, the big number Friday morning. As far as Fed governor speaking, looks a little light this week. Dudley will speak Friday after the unemployment number. That could be interesting. Bullard and Evans, who's always kind of soft on any kind of interest rate change, they both speak late Wednesday afternoon. So technically, the Bears look like they have the upper hand. The stock indexes have recovered, by the way, from a pretty shaky open. Obviously, if they're able to finally break out on the upside, it's going to bring even more pressure to the notes and bonds. Be very careful about picking bottoms. Look for spots to sell. You can reach at 800-500-2461 to discuss any futures market. Please give me a ring. Thank you. And options on futures may involve substantial risk and may not be suitable for all investors.